I think one of the big takeaways that I got there on that last slide, Matt, was you're talking about why they're getting ahead with these cuts, because we know there's going to be a big budget being announced and they're going to need to borrow all this money. So there's an element of what changes are being made to help their interests as well, right? Things that the government needs to do. And speaking of people with their own interests, we talked about BMO wanting to see more of those cuts. And this slide leads right into that as we talk about they're seeing the most amount of arrears right now. So talk to me about a little bit about where that sits. And I did have a question, because was it not BMO that was holding a lot of those pre-con mortgages when the condo market started to tank? Was it not BMO that rolled all of that in, or was that RBC?
With
Perfect.
appraisals and things like that? Is that what you're referring to? That was our
appraisals. So I wanted to know if they were starting to see some of those issues for the people that did close. Is that why they're seeing so much more? Because I'm curious, how does BMO get to the top of this list?
Investor mortgages, I would imagine.
They hold a lot of investment. They're one of the best lenders when it comes to rental offsets and things like that. So they do hold a big book of business with investor portfolios.
There we go.
Talked about this before, Dylan, is you got to really sometimes read into what the bank is saying and what benefits that bank. It's interesting to see RBC's third on this list. They're not as high as BMO and CIBC. And they were calling, and they have all those mortgages on the condo market, and they were calling for rates to be held steady, which I found very odd. I don't know why. It's something I got to dig into and find out. But it shows that BMO was the most aggressive in the rate cuts. We can see why. I think, and maybe Nicole can answer this, is it because of how many static payment variable rate mortgages they had potentially that a lot of these people might not have paid any principal off or something along those lines?
So definitely. So majority of the banks right now have a static variable product as well. So that definitely contributes to it. We saw huge numbers. I don't know the exact numbers off the top of my head, but in terms of people getting to a point where they hit these trigger rates, right? So it was a really big problem. But it's interesting because when we talk about arrears, one of the biggest things that I see on my side, are we seeing these increase in arrears numbers? Yes. But a lot of that really comes down to the fact that in early COVID, when rates were extreme lows, lowest than one we've ever seen, a lot of people were refining at that point in time, not because they had to consolidate debt or anything like that, just because the rates were so low. So values were inflated at that time. And so as an example, you have $1 million, or so they said it was worth $1 million at that time, people refining up to 800,000 because they can with the lower rates. And now over the last couple of years that they've actually accumulated debt because life got expensive, you get to a point now where they actually need help. We need to consolidate, which normally we would be able to do that and roll high interest debt. And now we can't do that because values are not where they need to. So they're not appraising. So we can't refi. Therefore, we're seeing people not be able to make their payments.
Yeah. I think during that time as well, there were a lot of investors that were sitting on those low variable rates for such a long time. And they were the ones that were impacted the most when we started to see those Bank of Canada hikes going up, those rate increases. And you'd have an investor that's like, my monthly mortgage payment was $2,500, $2,900. Now it's $4,000 and the rent's not covering it anymore. Right. So when you say that, when I hear that BMO is very investor friendly, it makes sense to me now a little bit more why they'd be seeing higher arrears as people have been struggling at those higher rates for longer.
And it's interesting because you see Scotia kind of way on the bottom of that list. And Scotia used to be one of the number ones for rental properties and things like that as well. And early this year, don't quote me on it, but I want to say it was like January, February, they actually scrapped that policy and they changed it. And it is not very friendly for subject property rentals anymore. And so, but you can also see how that now translates into that. And this year, they're closer to the bottom of that list. So it makes a lot of sense.
Didn't Scotia have like super high advertised rate for a little while there to try and suppress the amount of mortgages coming in or investor mortgages?
It was really bad for quite some time. They are one of my favorite lenders. They have fabulous products, prepayment privileges, and it got to a point where I actually couldn't send them a lot of business, or at least as much as I normally do for a good period of time, because they hiked up those rates, because they were just like, thanks, our bellies are full for now. We want to keep a lot of that away, and thanks, but no thanks.
Interesting. So again, to take away from that, it's not just government policy that you got to watch for. It's what's on the books at the banks where they're lending. What are they watching for, right? And at the end of the day, for any buyer that's looking, it's that conversation with Nicole so that you don't end up in a situation, potentially some of these investors in BMOs, about knowing what you can carry in. This is the outlook, but what if this happened? Would you be able to carry those payments? And what does that look like? I think that's something that buyers need to be very aware of, especially in these times where, as we've discussed, a little unprecedented, a little bit more uncertainty around what policy changes are going to happen. And we saw that with unprecedented increases in such a short period of time there.